Welcome back, everybody. I just wanted to do a real quick video kind of explaining a little bit about how stocks and ETFs, exchange traded funds, work. I don't know, I just kind of noticed like I'm jumping into all these high dividend paying stocks and not really explaining how any of this stuff really works. Most people are buying stocks with the hope that the value is going to go up over time. Because historically speaking, like the overall market goes up about 8% a year, not including dividends. Anyway, so you buy a stock, it goes up after some amount of time, a few months, few years, and then you sell it. That's the only way you're really going to make any money, unless you're buying stuff like I do, which is the stocks might not really go up in value, but they're going to be paying you a nice fat dividend while you own it. Now, with something like the overall market, like the S&P 500, for instance, that's not the overall market, but it is one of the biggest the biggest index. And in index, you have like the Russell 2000, the 3000, the Dow Jones. You hear the Dow Jones a lot in the last few years. That represents 30 companies that focus on U.S. industry. Anyway, these ETFs, an exchange traded fund, think of it as a stock, but it's a representation of a sliver of all of these companies. The nice thing about owning an ETF versus just a standard stock is you are investing in a little bit of all of these companies. And if one of them is underperforming, or a few of them, the ones that are doing good, kind of boost it up and hold the value. Another thing about the S&P 500 or any of these other ETFs is they might pull a company out that's underperforming and add another company, to that index. Usually, when that happens, a good example is like Tesla. The stock price will go up. It's like they've been inducted into, I don't want to say Hall of Fame or something, but it's kind of like a nice club. It's really big for a company to be on an index like the S&P 500. It is really smart to be diversified. I was telling one of my good friends that I'm still trying to get in. I'm trying to get him invested. I was telling him about some of these high dividend paying stocks that I have, and he said, well, why don't I just buy that one, that this one in particular I was talking about. And I said, well, you could, but if something happens with that company, it's in an industry where it's gonna, something catastrophic happens, it crashes, then what do you do? I think between all 5 of my accounts, I have at least 25 different stocks. Going back to ETFs versus like a normal stock, I think I mentioned it stands for exchange traded fund. Exchange being like the New York Stock Exchange, the NASDAQ, and it's a fund that is traded. So it's just like a stock. You can buy it, sell it. Some of the really big ones like SPY, they represent the S&P 500. They're extremely highly traded throughout the day. Very easy to get in and out of. That's meaning the liquidity. Some stocks, some small companies, you might want to buy or sell, while your broker has to find those shares. I've actually been in a position before where I couldn't sell my shares while the company was crashing because it was so illiquid. Because it was a small penny stock company. It was back when I was a beginner, buying speculative stocks, hoping that they were gonna go from 5 cents a share to $1, because that'd be freaking fantastic. It'd be 20 times on your money. But anyway, there are all kinds of ETFs out there. ETFs that represent stuff from companies that help obese people. I'm not kidding. I mean, video games, millennial sentiment, what millennials like. So stuff like Facebook and Twitter are in ETFs like that. Social media type stuff. But yeah, there's all kinds of stuff. Some of my favorites are some of the technology ETFs. Also, one of my absolute favorites is QQQ, Power Shares from Invesco. It's basically the top 100 companies from the NASDAQ. Fantastic. Something else I'd like to address. A lot of new people, they're kind of scared to get invested. They say, well, what if the market crashes? What if I lose all your money? What if I lose all my money? Not your money. Wouldn't matter. But anyway, the thing is every time there's a crash, a big pullback, it has come back 100% of the time. And just full disclosure, we're probably going to have another big pullback here pretty soon, I'm thinking. But like this last one during March, it was a big, big, big crash. And I honestly went on a shopping spree. You got to think of it as it's a fire sale. I mean, at that point, when historically speaking, the market comes back 100% of the time, what are you really worried about? If it went to zero and you lose all your money, there's really not a lot to worry about anyway, because you're probably not going to be using money anymore. You're going to be trading with bottled water and canned goods that hopefully you have in your cabinet. So anyway, but yeah, historically speaking, like I said, the overall market, if you look at all the crashes and all the pullbacks and all that, it will still on average do about 8%, and that's before it pays dividends. The dividends aren't very big on some of these ETFs, because they represent a lot of companies that might not have a dividend or have very little dividends, and they tend to fluctuate month to month, because if one decides to pull back their dividend or raise their dividend, it's going to fluctuate. Or a stock comes in and an old one leaves, it's going to change it up. So right now, I really do feel like it is the easiest time for your average Joe to get invested. When I was a kid, I remember looking at a newspaper, and that's how you would see the prices of what stocks were going for. It was either that, or if you had a broker, you'd call them up and see, how is this stock doing today? This was before the internet. It was a long time ago, and because of companies like Robinhood, trading is now more accessible and cheaper for everybody to trade. What Robinhood did was they came in, built an app that's extremely easy to use with your phone, and charged zero commissions. So what happened was they took a huge chunk of the business from all the big brokers, and what the big brokers had to do was cut their commissions, because why are you going to spend $5 with Schwab to buy 5 shares of Apple when you could do it for free on Robinhood? Another thing that's relatively new is fractional shares. That's where you can buy just a sliver, if you will, of a stock that you like. You might really like Amazon, for instance, but do you really want to spend $3,000 and get the whole enchilada? You go through some of these brokers, and you can spend as little as $1, through like Robinhood, or $5 with Schwab, and just buy just a section of it. And if it goes up, the stock price goes up 20%, for instance, whatever you're buying is in direct proportion to that. So it's going to go up 20% as well. Nice thing about that is, you can just buy $5 worth at a time. But if you do buy a lot of little slivers of stocks, like you start going crazy, and you're like, man, I'd love to own this, I'd love to own that. Then you're having to manage a lot. And that's what's nice about ETFs, is you're literally buying a little bit of all of these companies, And if you wanted, you could actually just buy like $5 worth of that ETF at a time. It's going to make it so much easier for you. But anyway, I don't want to go on too long. I just wanted to do kind of a quick little intro on stocks and ETFs. Bonds exist as well. You've heard of stocks and bonds. I don't really mess with bonds too much because, quite honestly, they're boring. They're very safe and very boring. I could get into it with another video, or you can leave a comment and ask me if you want to know everything there is to know about bonds. I'll tell you, well, as much as I know about them. But anyway, just want to basically get some, a little bit of understanding on how all this stuff works, and really kind of show you how easy this is. I think in my next video I might actually do an intro to like the major brokers and just show you literally how easy it is to sign up and how to purchase, how to sell, because it's like way back in the day I was so interested, but I didn't have anyone holding my hand saying, okay, this is how you do it. When I was really interested, YouTube, the internet, it didn't even exist yet. So how do you find out? Well, I'll show you. So until then, thank you guys so much for watching. I love you all. Talk to you soon.